Now we'll go over a discussion of Medicare and employer group benefits. By the end of this lesson, you should be able to discuss Medicare insurance, Parts A, B, C, and D, explain the purpose of supplemental Medigap insurance, discuss employer group health insurance, and explain continuation of employer health coverage under COBRA. Medicare. It's funded through FICA contributions, which is approximately 1.5% by employee and employer with no wage cap, so that's unlimited. The more you earn, the more you pay. If eligible for Social Security benefits, you're eligible at age 65 for the worker or spouse. You're automatically enrolled in Medicare if receiving Social Security benefits. If not, you would apply. It's 3 months before your 65th birthday typically. And there is coordination of benefits with employer health benefits. Medicare is a secondary payer in this arena when that comes into play. So if you're still working at age 66, age 70, and you have employer group health, Medicare is secondary, your employer health is primary. On Medicare, Parts A and B. Part A is inpatient care in hospitals, nursing facilities, hospice, and some home care. There is no premium for fully eligible persons. Inpatient deductibles and coinsurance do apply. Part B is the doctor services, hospital and outpatient care, therapy, lab, durable medical supplies. There is a monthly premium for Part B, and annual deductible and coinsurance applies. Part D is prescription drug coverage. Offered through Medicare-approved private insurance companies, there is an annual enrollment period, annual premium, deductible, and coinsurance apply. There's a benefit limit. There's something known as the donut hole, too, and that's dealing with retiring early. Thresholds are also come into play. It is encouraged you comparison shop providers as plans and premiums will vary. There is, on the Medicare website, a formulary where you could punch in the medicines that you're actually taking, and it will recommend various providers that are tailored to whatever your individual needs are. And now we have Part C, Medicare Advantage plans. Rather than opting for the original Medicare programs, Parts A and B, an eligible person can select a Medicare Advantage program. Part C coverage is offered by private health care providers. It works as an HMO or PPO. There may or may not be any premium, deductibles and coinsurance, and generally combines benefits often available through A, B, and D. Should be noted on Medicare Advantage. I deal with clients who come in the door, they love $0 premium that they're paying for their Part C, but they do not like the fact that coverage is severely restricted. For those who don't have any money, it's a very viable path to get them some health coverage in their retired years. For those who want control of their policies and control of their care, I should say, they will purchase a Medicare supplement, which we're going to get into, that might cost a couple $100s a month, but it gives them total control of care. So there's a trade-off on the whole spectrum. Low premiums and reduced benefits, or high premiums and very rich benefits. So, and that's what we're talking about here, the Medigap policies, Medicare supplemental insurance. Some of the characteristics. It is supplemental health care insurance sold to Medicare recipients by private insurers. And it's designed to fill in the gaps, hence Medigap, in Medicare coverages. Paying those deductibles on Part A and B, co-pays on Part A and B, it provides a smooth filling across those so that there's no other additional expenses other than the monthly premium. Plans can vary, each with novel features, and the premium is paid by the recipient of the services, so the customer. Premium cost depends on features, age of enrollee, area of country, gender, etc. So, question, why consider buying a Medigap plan at age 65? Well, first is the possibility of significant future healthcare expenses not completely covered by Medicare. And again, those could potentially deplete in the state over time, depending on the size of the estate. Additionally, delaying the purchase of Medigap will increase premiums, and there's a possibility of being rejected. Now, on that one, there is a possibility, but also during annual open enrollment, it is a take-all-comers scenario. And you are encouraged to work with your clients to comparison shop for coverage. Find the plan that best fits their needs. Because of the ability to have an open enrollment period, if the client's health changes positively or negatively, there is an opportunity to switch companies at least once a year. So Medicare website, medicare.gov, is the official site, and at that site you can check out the various components, parts A, B, and D for hospital, medical, and prescription drugs, as well as part C for Medicare Advantage plans. Let's talk about employer group health insurance. Some of the characteristics: benefits may include hospitalization, physician services, medical cost, other group health provisions, which are dental, vision, and prescription drugs. No physical exams are necessary in most cases, and you get group rates. So let's talk about eligibility. Employees generally must usually satisfy a probationary period before they're eligible to participate in the plan, and that will vary by whoever the plan administrator is. There's dependent eligibility also. Most plans provide similar benefits for dependents as covered employees, and recent changes, currently dependents up to age 26. So adult children who do not have health insurance on their own, as part of the changing health landscape in America, you can now add those children back onto your group health coverage, whereas in the past, if they were out of school and on their own, even if they're living at home, they wouldn't be covered. Well, that age has increased now, so that's a positive. It is unknown yet the impact on our future premiums. We'll see as they come out. Some taxation of group health benefits. On the employer side, premiums are deductible as a business deduction. To the employee, premium payment and medical benefits are tax-free. Now, a benefit carve-out plan. A carve-out plan is a medical expense plan that has been singled out for individual management by a provider other than the primary healthcare provider. Typical carve-out plans include dental, vision, prescription drugs, and behavioral health plans. Regarding dental expense insurance, typical characteristics of dental plans provided by employers are that the premiums may be shared between employee and employer. There are deductibles and coinsurance for the employee or the patient. There are limits, typically annual dollar amounts and number of visits. For example, regular cleanings 2 times a year with a minimum 6 months in between. Limits on fillings and deductibles for fillings, $50, $100, just again depends on the plan. And major dental work has limitations. Might be a $600 limit or a $1,200 limit, are very common in the workplace. So we have various classes of service. Class 1, diagnostic, preventative, x-rays. Next is restorative care, fillings, gum disease issues, root canals. Class 3, major restorative, and that's going to be crowns, bridges, and dentures. And last is orthodontia, braces and teeth alignment and bite issues. In that last class, orthodontia, typically there'll be a very low limit for that coverage, and braces can cost a lot. Trust me, I'm a parent. Common in the marketplace is between $1,000, $1,500, and $2,000 are common numbers you'll see. It's rare to see anything above $2,000. And some certain exclusions would be teeth whitening, for example, cosmetic teeth, getting veneers, bonded fillings that are cosmetic in nature, not from tooth decay or other covered items, or trauma, for example, being hitting your face in the car accident, things like that. Moving on to vision health insurance. Again, there's premiums, deductibles, copay, out-of-pocket expenses when the service exceeds the annual cap. Covered services typically is going to be routine eye exams 1 time per year with most plans. Corrective lenses, contacts, prescription lenses, and frames. There will be limitations. One of the major providers out there, VSP, and again, this is not an endorsement of them, it's just a feature of what they have. Neither good or bad, it's just what it is. They will provide lenses every single year, and they'll do frames every other year, and there are limits on both of those features. So you'll get good basic coverage, but if you want to go to a designer frame that's $400, you will be paying some portion out of your pocket. and other covered services, possibly medical issues, eye disease, laser surgery, not elective laser refractive surgery, just because you don't want to wear glasses anymore, but if there's some underlying issue where lasers are used. Retina detachment, for example. There are also limits, annual dollar amount of limits, number of visits, and cap on cost for frames. Kind of went over that already. And exclusions. So let's talk about portability of employer health plans. Generally, employees cannot transfer insurance from one employer to another employer. There's two ways for an ex-employee to continue coverage. One is conversion to an individual plan, and that is when the employee, or former employee now, will be paying all the cost of the premium on that, whereas before, when they were working, the employer may have paid all or part of that cost. Next is continuation of coverage under COBRA. So if you are laid off, if your spouse dies and you're the surviving spouse who is not working at that company, you can continue on your benefits through COBRA. Regardless of the triggering event for COBRA, the duration is the same, and that is 18 months after the event. Another one, divorce is another one. Couple gets divorced, the ex-spouse does not have coverage at that point, because they're no longer married to the employee, they can continue on through COBRA. Let's talk about converting to an individual policy. Conversion privileges typically are available for 31 days after termination or when continuation ends. Individual policies can be purchased without evidence of insurability and without regard to pre-existing conditions. So, again, if you're not in the best of health, it may be best just to jump on the conversion so you have something in place and then shop afterwards. So that way you're not left without coverage. The premium rates reflect individual pricing, not group rates. So translating that to plain English, you're going to pay more. Insurer has the right to redefine the benefits offered in the policy. And a word about COBRA. We brought that up a couple times. The Consolidated Omnibus Budget Reconciliation Act of 1986, known as COBRA, one of the features of that legislation requires group health plans allow employees and certain beneficiaries to elect to have their health insurance extended up to 36 months following a qualified event. So again, it may be 18 months, but depending on qualified events, it can be up to 3 years. Qualifying event. Termination, whether voluntary or involuntary, when not the result of gross misconduct. Ineligibility to qualify for coverage based on the loss of hours. So you go from full-time down to 15 hours a week. Well, you're no longer meeting the threshold to qualify for the group plan. Dependent loss of coverage, death of worker, divorce, worker access to Medicare. We've gone over a couple of those already. And dependent ineligibility. For example, child's loss of dependent status. So it should be noted, long-term care and disability coverage is not subject to COBRA. So again, COBRA applies mainly to health insurance. So continuation of coverage. For normal termination, except gross misconduct, we have 18 months, 29 months for a disabled situation or dependent, and 36 months for others. So child, surviving spouse, divorced spouse, and planned terminations. Some other important facts about COBRA. Employees must elect COBRA coverage. It is not automatic. The employee is responsible for timely payment of the premium, and the premium cannot exceed 102% of the normal group premium. COBRA rules only apply to employers of 20 or more employees. So to sum up, we reviewed some aspects of Medicare, Parts A, B, C, and D, supplemental Medigap or Medicare supplement insurance, employer group health coverage, and continuation of employer coverage under COBRA. Thanks for your time.